to Shalby Limited's Q3 and Financial Year 25 earnings conference call, hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star 10 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kashish Thakur from Elara Securities. Thank you, and over to you, sir.
Thank you, Manav. Good afternoon, everyone. We welcome all the participants to the Shalby Limited Q3FY25 earnings call hosted by Elara Securities. Today we have with us senior management representatives from Shalby. We will start with performance highlights from Mr. Amit Pathak, CFO, and Mr. Deepak Anand, Global Chief Business Officer. After that, we will open the floor for question and answer for all the participants. I will now hand over the call to Mr. Jigar Todi for important disclaimers regarding any forward-looking statements that may be made in today's call. Thank you, and over to you, Jigar.
Thanks, Kashish. Good afternoon, everyone. Our investor presentation is uploaded on the stock exchange website and our company website, shalby.org. We do hope you have already had the opportunity to go through the presentation. Please note that some of the statements made in today's call may be forward-looking in nature and may involve risk and uncertainties. Kindly refer to slide number 2 of the investor presentation for a detailed disclaimer. Now, I would like to hand over the call to CFO, Mr. Amit Pathak, for his opening remarks. Thank you, and over to you, sir.
Yeah, hi. Good afternoon, everyone. So I'm pleased to welcome you all to the Shalby Limited Q3FY25 earnings call. Now I will walk you through the financial performance of your company for the third quarter of FY25. Consolidated revenue of rupees 281 crore in the current quarter versus 221 crores in the Q3 of the last year. We have been grew by 27.4% on YOY basis. EBITDA of 39.3 crores in this quarter versus 46.8 crores in the similar quarter of the last year, with a margin of 14% in the current quarter versus 21.2% in the Q3 of the last year. And it has been down by around 16.1%, mainly because in the current quarter last year we don't have the PK Healthcare where we have the continuing with the EBITDA loss. And another thing, we have taken certain extraordinary hit on this implant business of around 4.8 crore. PBT of rupees 12.4 crore in Q2 of this current year versus 30.8 crore in the Q3 of the last year, with a margin of 4.4% in this quarter versus 14% of the Q3 of the last year. Now, revenue on the overall basis for the 9 months is 844 crores versus 704 crores in the 9 months of the last year, and we have been grew by 19.9% on the YOY basis. We have continued to maintain the strong balance sheet with the low gearing ratio, even with the higher infusion of the working capital in our implant, and currently we at around 0.27x, which is within the debt-equity ratios. Now I will running you through the standalone performance of the hospital business. Standalone revenue of 227 crores in the current quarter versus 200 crores in the Q3 of the last year. We have been grown by 13.3% on the YOY basis. EBITDA of 48.48 crores in the current quarter versus 48.4 crores in the Q3 of the FY24, with a margin of 21.5% in the current quarter versus 24.1% in the Q3 of the last financial year, and we have been grew by around 0.8% on the absolute number. PBT of 35.8 crores in the current quarter versus 38.5 in the Q3 of the last year, with a margin of 15.8% in the current quarter versus 19.2 in the Q3 of the last financial year. At a standalone level, we continue to maintain the strong balance sheet with the positive net cash balance of 66 crores. With the operating leverage kicked in and growing with asset-light approach, our standalone ROC resulted to 15% in the current quarter on an annualized basis. ARPOB and Analysts has shown the improvement of 42,704 and 3.62 respectively, compared to 37,342 and 3.79 in the same period of the previous year. ARPOB on YOY basis has been grown by around 14.4%. The number of occupied beds. We are operating at around 646 numbers in terms of the occupied bed in the current quarter versus 590 in the quarter 3 of the last year. And it has been increased by 10% on the YOY basis at an occupancy rate of 46% in the quarter 3 of the current year. The payer mix for the current quarter is in line with the historical trend, and we are maintaining 35% of the self-pay, 42% for the insurance, and 23% for the government and others. The revenue of Shalby Finance for the current quarter is 24 crores versus 25.74 crores in the last quarter of the current year, with a marginal decrease of 6.3% on the quarter-on-quarter basis. The ARPOB and allowance of Shalby Finance is 85,529 and allowance is 3.54 respectively in the quarter 3 of the current year. Shalby Finance is presently operating at 24% of the occupancy level, and it will increase gradually in coming quarter. The current quarter, 55% of the contribution of Shalby Finance has been come through the international patients. The overall revenue international business is remain at 16.7 crore. The contribution from Finance is 13.3, and the other hospitals are 3.43 crore in the current quarter. At Shalby, our undivided focus has been demonstrating our clinical excellence through successful execution of many diverse critical surgeries in several of our hospital units. We also take pride that Shalby has successfully completed 26 transplants, which include 11 kidneys, 10 liver, 5 DNP during the quarter 3 of the current year. In January 2024, the Shalby Tissue Bank has successfully inaugurated by our Home Minister of India, Mr. Amit Shah. Further, our FOC franchisee business delivered a adequate performance in the current quarter. The total revenue from the FOSO business is 2.57 crore, which has grown by 82% on YOY basis, and FOSO is around 0.71 crores, which has been grown by 4.4% on YOY basis. Now, to talk about our home care business, we served around 7,217 patients in the current quarter versus 6,840 patients in the quarter 3 of the last year, which has been grew by around 5.5% in terms of the patient count. Revenue from the home care business is 3.6 crores in the current quarter versus 3.4 crores in the quarter 3 of the last year, which has been grew by 4%. As a part of our social commitment, we continue to spread awareness about the importance of health and well-being through various social media platforms and created 110 plus healthcare videos. We also conducted more than 310 plus healthcare campus and 120 plus healthcare talks across all our units during the last quarter as a part of our various community outreach programs. Shalby also takes pride in nurturing young talents through Shalby Academy vertical, with 1,000 plus registered in various healthcare programs during the quarter 3 of the current year. We would like to inform that Shalby Academy has successfully completed 200 plus enrollment for team Indore and 50 plus enrollment for the team Jabalpur in paramedic team. Total paramedic for the current year is 385 plus enrollment as of December 2024. So far, 87 students certified to ASA and schools and above. Trained 30 plus D Pharma for 1 month students at our various under the guidance of General Physician with the collaboration with Saga School of Pharmacy, Gandhinagar. Now, for our implant business, our SAT implant unit at the US has delivered the EBITDA profit of 74 lakhs in the current quarter due to the high sales and low cost. Our operational efficiency has improved quarter-on-quarter basis with the optimization of the procurement cost. Shalby Advanced Technology US has delivered a revenue of 26.8 crores in the current quarter versus 21.5 crores in the quarter 3 of the last year, with a growth of 25% on the YOY basis. Now I will hand over the call to Deepak to share insight about the implant business. Over to you, Deepak.
Thank you, Amit, and good afternoon to everyone. Let me start saying that during the third quarter of this financial year, our implant business made significant progress. Shalby Medtech Limited generated a revenue of 22.6 crores, which is up by 58% on a year-on-year on consolidated basis. Shalby Advanced Technologies generated revenues of 27 crores, which is up by about 25% year-on-year basis, with contributions from US and OUS at 33 and 67% respectively. Like Amit mentioned, the EBITDA of Shalby Advanced Technologies in quarter 3 is 7.4 million INR, which is 74 lakhs, was 19 lakhs in quarter 3 of financial year 24, which grew by 290% year-on-year. The total construct sold has grown by 16% from 2,637 units to 3,071 units in quarter 3, and grown by 56% from 6,227 units to 9,715 units on a 9-month basis. The average COGM, that is cost of goods manufactured per component, excluding material, has decreased by 15% quarter-on-quarter basis and 44% year-on-year basis. Shalby Global Technologies Private Pte. Limited generated a revenue of INR 3.4 million from the Indonesian market. The components purchased and sold is 160 units in quarter 3 financial year 25. We are actively focused on bolstering our team with skilled professionals, transitioning our sales mix to retail customers from wholesale, enhancing operational capacity and efficiency, expanding our product pipeline through extensive research and development efforts, and significantly reducing procurement costs. The reception of our Shalby Advanced Technology implants in hospitals across all markets that we have launched has been highly positive, and we've been receiving additional orders from the Indonesian market. With our key strategies firmly in place, our team is fully dedicated to executing these plans flawlessly. Shalby is well positioned to achieve double-digit growth with sustainable profitability, while also expanding and deepening our presence by opening up new geographies. These efforts will ultimately drive the creation of sustainable value for all stakeholders at Shalby. The 4 different pillars that we focus for this whole year was sales. Like we spoke a little bit about, Shalby Advanced Technology sales growth at 25% over last year, quarter 3. Indonesia, we have sold over 1,200 units in this year with a revenue of INR 30 million in the 9 months of this year. Response has been great, and we'll be adding more surgeons into the kitty. India is growing at 253% over last year and 28% growth over the previous quarter. We have added more than 18 sales members in India across geographies and 5 new distributors in this quarter. US business, 5 new surgeons doing their first case in this quarter, and we have onboarded 7 new distributors in this quarter. As we speak right now, we are looking at Latin American 5 countries, Russia, Iran, Malaysia, as actively as our next growth phase, with expansion in Japan. Our second pillar was COGS reduction. Our COGM has gone down by 16% over the previous quarter, and we are currently at $65 against the $77 of last quarter. This has been done by change in the vendors of raw materials and increasing our capacity in the plant. Capacity increase and dual supply chain system is our pillar 3. Our plant manufacturing has grown significantly from manufacturing 2,700 components in April to 7,500 plus components in September. This has allowed us to produce more to take care of the demand as well as drive the COGS down. Looking at more new vendors for raw materials coming on board in quarter 4, we will have a good capacity soon to expand for global business. The last pillar being new products. The team has been working for today, next year, as well as 2 years down the lane. SAP India has been established, and we have hired more than 15 engineers. We received 2 weeks back the US FDA approval for the well-awaited PKS thin bin, which will be called as the Duranium, and they're on track to launch many products soon. Just 24 to 36 hours back, we've also received the CDSO approval for launching robotic surgeries in India. We also received our bone cement approval in the previous quarter, and we have successfully launched our product in the Indian market. 15 plus engineers have been hired across the globe to get started on multiple new product initiatives. That's it from the implant business. Over to you, Amit.
Deepak, we lost you. Are you audible?
Yeah, I'm audible. I said that's it from my end, and over to you, Amit.
Okay, yeah, thank you. So we also like to share a couple of clinical excellence. So Dr. Nishita will share in the forum. Over to you, Dr. Nishita.
Hello, good afternoon all. I am Dr. Nishita and I will be happy to share some clinical excellence and procedures done in Q3 at group level Shalby. Clinical updates and research across units during Q3 FY25. Our commitment towards augmenting Shalby medical programs has made notable strides in advancing our growth initiatives for single specialty to multi-specialty by various brand awareness campaigns and through digital platforms. To share, we have been purchasing into good high-end equipment like eBus, which is an angiobronchoscopy, for lung cancer, fluid tests, and inflammation. Some of the excellent things or rare surgeries we have done is one we have found out with a donor with AEND blood group, a 20-year-old male donor presented with a rare AEND blood group with previously diagnosed as an O negative blood group outside. A pedigree analysis was done and then the sample was sent to Australia for molecular confirmation and then it was discovered as AEND blood group. AEND is a very rare subtype of A blood group, meaning its incidence worldwide is less than 1% of the population, and in India it is less than 10% till now. Other than that, we have been doing a lot of interventional surgeries where the surgical procedures are avoided and they are done through an international invention. So 122 international surgeries took place in Q3. The 34 international surgeries took place in Shalby, SD, 24 at Surat and Baroda hospitals. Highest procedures done by eBus Tumba machine which we have recently purchased are thyroid microwave ablation, uterine angiography, embolism, and radial eBus procedures. We have also operated a patient with 3D lobectomy where with a smallest incision, 2.5 centimeter minimal incision was done and the procedure was done post-operative. The patient was walking in 4 hours. As already informed, we had the 26 transplants and for the clinical research trial also, we have done 13 ongoing research and 10 upcoming research for the Q3. Thank you.
Thank you, Dr. Nishita. So now we can open the forum for the Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Rohan Vora from Envision Capital. Please go ahead.
Hello. Thank you for the opportunity. So the first question was on Sanar. So basically wanted to understand the profitability on Sanar. So what was the EBITDA this quarter for the 9 months and what is the guidance on profitability for Sanar? Thank you.
Yeah, I think Mr. Kapoor will be happy to take that question.
Hello, hi, good afternoon, everybody. Am I audible?
Yes, sir, we can hear you.
Okay. So, EBITDA this time, as Amit has narrated earlier, the EBITDA was a slight reduction in revenue. That's why the EBITDA losses still continue. And the slight reduction in revenue was due to some changes in the doctors' profile because we got a couple of doctors leaving and new doctors joining in place of them, like liver transplant, bone marrow transplant, and medical oncology. So we have got 3 doctors in these 3 specialties getting changed in last quarter, and we have got the new replacements, and they will take about a quarter or 2 to get stabilized as they have moved from large institutes to this place. And going forward, we expect maybe from fourth quarter onward or maybe first quarter of next financial year, we should be EBITDA positive.
Yeah. And apart from that, as you was asked, the 9 month EBITDA loss is close to around 4.3 CR for this financial year. And you can see on the 25% of the operating level where we are operating, we clock around 70 crores of the top line in terms of the revenue from operations. And where our, if you can see, if we are going to achieve another 10 to 15% on the occupancy level, where we are right now around 25%, we are going to become the EBITDA positive. So Sanar, we are going to see it will become the EBITDA positive very shortly. However, if we are talking about the EBITDA positive trend for the Sanar, we are hopeful it will come in this quarter and next financial year. We are very sure that we are going to deliver the positive EBITDA because now everything has been streamlined as Mr. Kapoor has said. Due to the turbulence of the doctors, we have seen the lower revenue which has hit the EBITDA. Another thing I just want to share from my side on the PBT level, if we are talking about PBT level, we are at close to around 24 crores of the loss in the 9 month basis. Basically, you can see there are two components which is coming around after the EBITDA. One is the depreciation, another is the finance cost. So depreciation is close to around 11.6 crores for the 9 months, and finance cost is around 8.6 crores.
Understood, sir. That was really helpful. And sir, just wanted to understand the overall, the tax effective tax rate that we are looking at this year and the next year, because on a positive PBT, we reported tax expenses and then a loss. So just wanted to understand how that will transpire in future. Thank you.
So you're talking for Sanar or entire consolidated number?
Sir, overall.
So look, overall we are at around 36% kind of tax rate. If you look on the standalone hospital, we are close to on 36%. Overall basis, if you can see in the consolidation, the tax rates are more than 100% kind of thing on the PBT level. This is because we have taken a very conservative approach where we have stopped creating the deferred tax. We have stopped recognizing the deferred tax currently on the loss-making entity, which is the Shalby Advanced Technology, which is a kind of break-even, or PK Healthcare, or you can say Shalby is also on the PBT level is a loss. Shalby Advanced Technology, PK Healthcare, and MMDL. So it's a conservative approach. We don't want to create the deferred tax and then after we'll reverse when they will start generating the profit in the next year and year thereafter. So that is the reason you will see very abbreviated number in the tax that will continue for the couple of quarters. On the consolidated number, it will continue for the next 2-3 quarters at least. However, if you can see for the standalone, it will be ranging between 36% kind of thing.
Sure, sir. And just in connection to this, when are we planning to move from this old tax rates to the new tax rates?
So we are evaluating, currently we are under the MAT, which is getting exhausted into the current financial year, and then after we are going to take a call into the next financial year.
So then next year will be in the 25% tax rate for us?
Definitely, that will be there.
Okay, sir. Thank you. I'll get back in the queue.
On the standalone.
Understood, sir. I'll get back in the queue.
Thank you. We have our next question from the line of Yash Darak from RSPN Ventures. Please go ahead.
Yeah, am I audible?
Yeah, please.
So could you please provide me a breakup of revenue from surgeries and revenue from non-surgeries on a consolidated basis, if it's possible?
Look, we should not see the surgery on the console number because console standalone gives you the more appropriated number because in the console from the hospital front, if you can see, we have just the PK Healthcare. However, if you want a ballpark number, how much is revenue from the surgery and the revenue from the non-surgery business, we can give you the count. Right now, we don't have the handy revenue from surgeries number. So surgery count, if you can see, we have the arthroplasty is close to around 3,123 and the non-arthroplasty is 4,342. The overall surgery is 7,400. If you can ask me just to, for your interest, if I will say, In terms of the revenue, if you are talking for the standalone 220 crores of the business what we have, 211 crores is coming from the different specialty, and the remaining revenues is coming from the pharmacy, which is around 4.8, and the FOSO and FOSM and academic.
Usually the split between the surgical and medical revenue is 2/3 and 1/3 respectively.
Okay, got it, sir. Secondly, if you could if I missed it, you could provide me revenue from Sanar and if you could provide me revenue from Sanar and breakup of other expenses, as the other expenses have been increasing, what will be the ongoing run rate of the other expenses?
So revenue from Sanar we have already mentioned. If you are seeing for this quarter, that is revenue from operation in Sanar is close to around 23 crores kind of thing. And revenue from the other hospitals which are under the Shalby standalone, the revenue from operations are 220 crores. If you are seeing the other expenses, if you are talking about in terms of standalone entity, if you can see compared to the YOY basis, where we are at around other expenses of 14 crores versus 20 crores in this quarter, the reason for this is the Ortho Trend event. I think you have seen, we have conducted the mega Ortho Trend event in the current quarter, where we have spent close to around 2.3 crores in terms of the expenses. Another thing is coming in terms of the advertisement, marketing expenses, which has been increased by 1.1 crore on the YOY basis. And third thing in terms of the repair and maintenance, which is close to around 1.5 crores on the YOY basis on our different locations.
So how much of this do we see as an ongoing run rate? Is my question.
So Ortho Trend is a one-time event, so you have to factorize that expenses, which is into the quarter 3. So that was 2.3 crores. You are not going to see into the current forthcoming quarter.
Okay, fine. My last question would be with regards to the structure of Shalby business, that is the Shalby MedTech. So that's my doubt. That the implant business is Shalby Advanced Technologies, or is it Shalby MedTech?
So Deepak, can you take this question?
Sure. So the way the structure is, Shalby MedTech is the parent company, which is the implant company, and Shalby MedTech Limited is the parent company of Shalby Advanced Technologies, which is in the US. So Shalby MedTech company happens to be the parent implant company.
Because when we report revenues from implant business, I think they are from Shalby Advanced Technologies in the financials when we provide the segment information.
So yes, correct. We are reporting the number of the Shalby Advanced Technology US because that is the manufacturing unit.
Okay, so the MedTech implant company, it also sells the implants, and what does the Shalby Global Tech do?
So the parent company imports the implant from the US entity, that is the Shalby Advanced Technology, and they are selling into the Indian market.
Okay, got it. Thank you.
Thank you. We have our next question from the line of Agam Shah, a shareholder. Please go ahead. Mr. Agam, are you there?
Hello, am I audible?
Yes.
Just one question. The gross debt has been increasing reasonably on a frequent basis. If you would just give the reasons with regards to reduction in debt, how do you see the gross debt progressing here on?
So you're not very clear. Can you just repeat your question again?
So the gross debt has been increasing quite reasonably, if I'm not wrong, by around 50 odd crores. If you could give the reason for the increase in gross debt and the increase in finance cost, and how do you see it progressing forward?
So look, the thing is gross borrowing, if you can see, is mainly increasing in our implant company. Okay. as Deepak has just briefed that we have got the approval for near CKS Gold approval we have just received, and there are a couple of products which are also into the pipeline which approval is pending. So as you can see, the implant business is expanding heavily. We are doubling our revenue. We are very aggressive in terms of the revenue forecast for the next year. We are investing into the inventory. So the major investment, if you can see for the Shalby group point of view, hospital per se, we don't have the debt. We are the hospital business, the cash rich. We are not borrowing anything for the hospital. But for the next couple of quarters, we are keep investing into our implant business.
Okay, got it. Yeah.
Thank you. We have our next question from the line of Raja Kumar with Vidyanathan, a shareholder. Please go ahead.
Yeah, good afternoon. Thanks for the opportunity. Yeah, I have about 3 questions. So the first question is on the implant business. Why quarter on quarter it has shown only flat? There is no growth at all. And in the previous call you mentioned that you are expecting significant jump in revenue for Q3 and Q4. So if you can just give some color on this.
The implant business at a console level has grown by 58% from previous quarter, and it has also grown by 25% year on year. So I mean, if you can tell me exactly where is the thing, I can come back to you, because from a growth standpoint, there is a growth in the.
No, I'm talking about the segmental revenue that you're showing. Manufacturing of implants, 267 million revenue in current quarter vis-a-vis 277 million revenue in September quarter.
Yeah. That is for the. That is from. Okay. So that is standalone Shalby Advanced Technology. So that's primarily because of in the US market there are 2 things. The plant also had a little bit of low in terms of manufacturing because of Christmas holidays. The market was also in the US market, Christmas is usually a dull month. So that's the reason why you see revenue which will get picked up in this quarter.
Okay. And where do you stand? I think you gave like a 5-year outlook of $100 million business from this business. Do you still stand to that number? Because that number looks very ambitious considering the current numbers.
It is ambitious, but I think we're on the right path towards this. And it's a very large market. It's a globally $30 billion market. So $100 million coming in from a $30 billion market is not that difficult. It's just that the base needs to be strong. So right now, as an organization, what we're doing is to build the right base, right? Our costs have coming down quarter on quarter. Our revenues have started growing. We're starting building our new portfolio. We have dual supply chain system now in most of the places. So unless and until we don't bring that up very strongly, pressing the accelerator for scaling up may not be the right thing to do. I think we're on the right track to build the base very strong in the next 6 to 8 months' time. And from there, I think acceleration can happen quickly if we get our act together. So what I'm saying is $100 million is still, it is an ambitious number, but it is still a possibility.
Okay. And any path to break even, because you continue to lose about 8 crore of money every quarter. So what is the path for break even for this business?
So basically, if you look at it, the money is being spent majorly on 3 things, right? One is in terms of building inventory. We have to put up a decent amount of money on capital expenditure. We have to spend money on marketing. There is a good amount, unless and until, because this is not known to people, unless and until we go out and tell people we're present there, it will not happen, right? So in this thing, there's a function of only 2 things, just to keep decreasing the COGS and keep increasing the sales, and we'll match up there. So I think that's the track that we are, right? I mean, if you look at quarter on quarter, you'll see the COGS going down. If you see quarter on quarter, the sales going up. And that's the only way it will happen. This is a medical device business, so for like any healthcare, for people to start using it, for the patient to start feeling, unless they see those results, unless the surgeons start feeling those products, the takeoff will not happen. But the good part is that there is a lot of positivity on our product, People are happy, the surgeons are happy, they're getting positive response from whichever countries, whichever markets that we've launched.
Okay. So when do you expect this business to break even?
I think we will touch end of next year close to solid single to double digit EBITDA, and that's what I think. Next year, same time, I feel we should be in a good single to double digit EBITDA.
Okay. Yeah. So the next question is on the hospital business. Sir, your performance for this current quarter, if I compare with the previous similar quarter, even we have not kind of matched with that performance. So would you like to give any color on that? Why our the bottom line performance is not in line with the previous year quarter? Because last call you mentioned that you had some floods. Because of the floods, many of the planned surgeries could not be executed in Q2, and you said you were expecting a significant bump up in Q3, but that has not kind of played out. So if you could just give some color on this current quarter.
Sure. So before I will highlight the couple of things about the hospital, I just want to add a couple of questions which you have asked for the implants, which Deepak have answered. So I will just touch upon two things where we are talking in terms of the segmental revenue for the implant also. If you can see on the 9-month basis, the revenue for Shalby Advanced Technology has improved from 52 CR to 79 CR. So which is a substantial increase if we are talking in terms of the growth of the sales, where we have just received the approval for our new products. So you can understand once the new product registration will be there in India, from the next quarter of the next, after the quarter one of the next financial year, we are going to see the leap in terms of the sales for Shalby Advanced Technology. So that will be there. Definitely we are going to see. And another thing, if you can see the profitability, definitely you can see that we have the 6 crores of the loss into the last quarter of the same financial year. This quarter you can see the loss of 8 crores. I have already given in my commentary that we have made a provision against certain implants, which is the slow moving kind of thing, which is close to around 4.8 crores. So you are going to see the impact around that also. Now see coming to the hospital, if you can see the hospital on the YOY basis, because quarter 3 is always a seasonal business for us. So we have done 195 crores of the top line from the hospital business, and this quarter we have delivered 220 crores. So there is a double-digit growth, which is historically we have given into the normal pace. So the pace has continued in terms of the growth in terms of the top line. But when we are talking for the bottom line, definitely 24% to 21% of the bottom line, which is slightly has been reduced, which is mainly one thing is because of around 1.7% increase in terms of the cost, because of the peer mix and other things that has been increased. And during the quarter, I have already highlighted, we have already have around 2.3 crores of the offer trend event. If that will not be there, then our OPEX has not increased by 1%. So that delta of 2 to 3% is because of that.
So totally, what is the amount of one-off you have in this quarter, sir?
Can you repeat again?
For the hospital segment, what is the total amount of one-off that is dragging the bottom line?
So one-off would be in the range of 6 to 8 crores in this particular quarter. I think what is important to note is that for the implant business, what we did in the full financial year of FY24, in terms of the revenues, in terms of the constructs sold, all of these we've been able to achieve in the first 9 months of this year. And this quarter, the additional quarter is going to bring in additional 35 to 50% kind of growth on last year's number in the implant business. On the hospital front, as Amit Bhai mentioned, we are looking at, we've already achieved a 15% kind of growth. If you look at any parameter, whether it is inpatient growth, whether it is outpatient growth, whether it is the surgery count, and if I include the acquisition, the growth is more than 18%, on a year-on-year basis. So that is that. The numbers, of course, because of the losses of Sanar Hospital in terms of EBITDA, as Mr. Amit Bhai mentioned earlier, Essentially, it's a 3 crore EBITDA loss for the quarter, and a total of 9 crore loss at the PBT level. So all these numbers of Delhi have been affecting the total hospital performance for us. But we are expecting that in the coming few quarters, as Mr. Kapoor mentioned, we should be able to come out of this.
Okay, great, sir. So lastly, this slide number 19, which you have given, maturity-wise hospital performance. So this is a very good slide, sir. Only request is if you could also give comparative numbers for the previous quarter, easier for an investor to understand how the progress is made in each of the buckets. Because most slide is just standalone, so we can't say what is are we improving or So the comparative slides if you had given, that would be helpful.
Sure, we will.
Yeah. And lastly, this ROCE number which you are giving, again you are giving only for the standalone hospital business. So, again from an investor standpoint, we are looking at the overall business. So, it would be better if you give the ROCE performance also on a consolidated basis.
You can refer our slide. We are giving for the consolidated also. Even the 5-year trend on the ROC is also be given for consolidated as well as standalone basis in our investor presentation.
No, so the return on capital employed is given only for standalone, sir. It's not given for consolidated.
So, I will suggest you to go to slide number 4. The ROC is given for the quarter. If you go to slide number 5, you can see the ROC for the last 5 years, 6 years has been given there.
Okay. Okay, sir. I will go through it. Maybe I missed it. Okay. Thank you, sir.
Thank you. We have our next question from the line of Bino Patiparampil from Elara Capital. Please go ahead.
Hi, good afternoon. Couple of questions, thinking. One on this profitability and EBITDA margin on the standalone business. You made a few comments. So going forward, should we look at this 21-22% as the sustainable levels?
Yeah, so we are going to sustain the profitability. As I mentioned, there is a one-off kind of OPEX has been there in terms of the ortho trend event. And apart from that, as an organization, we are always going ahead with a lot of cost optimization process where we are optimizing in terms of the cost and other things. So we are going to see the improvement going forward also.
Yeah, okay. And comment on further bed expansion plans, anything look forward to?
Yeah, so expansion plan, I think there are, I'm sure the question is around what are the potential growth areas for us. And the potential growth areas really are, that in the existing bed capacity, we are going to be able to nearly double, more than double the top line. We have that kind of capacity within the existing facility with a very minimal capex of between 50 to 100 crores. We will be able to generate this kind of revenue in the coming years. So we are expecting a double-digit growth going forward for the next 4 to 5 years. And, as I said, increasing our in-house capacity will give us that growth on the hospital side. On top of that, we are adding 2 Linac bunkers, one in our facility in Ahmedabad, another one in our facility in Surat. So again, they will be, providing high-end radiation within the oncology segment. That is another area of growth that we are expecting. The third is, we are also planning and we are already working on introducing high-end bone marrow transplants in some of our other units outside Delhi. So that is going to be another area for us. Besides that, as we have announced earlier, we have the potential to expand, in our existing facility in Delhi. So, the works on that are going on in terms of, how much FSI is left and, what can be used on that. And essentially, we are optimistic we'll be able to add significant capacity, from the existing setup. And of course, the last one is, the Asha Parekh Hospital in Mumbai, which has been announced earlier, and basically the works for that are also going on. So that is another one on the hospital side. As mentioned earlier during the commentary, we've launched our bone bank, which was inaugurated by the Honorable Home Minister of India, Mr. Amit Shah, in January this year. Essentially, that is going to be another major area for us in terms of growth. The reason being that today in India, largely doctors are using the synthetic bones, and these are not only expensive but also imported into the country, and with much lower clinical outcomes compared to the natural bone which is preserved. So this is a very high-end bone bank that we have set up. It is the largest bone bank in India, and it is the most comprehensive bone bank of Gujarat. And with this, we will not only be supplying and working with our other units, but we will be partnering with a lot of institutes in India as well. So these are the potential growth areas for the hospitals business. I'm sure Deepak wants to add, in terms of how, we are going to be looking at growing the implants business, because there are a lot of initiatives we've taken, as he has mentioned. But over to you, Deepak.
Thank you, Chennai. From a growth standpoint, multiple things. One is going to be driven through a lot of sales and marketing activities with our current portfolio that we have. But we have just launched our bone cement about 2 months back into the market, getting really good response for that from the Indian market. We're also looking at some partnerships which are country specific, whether it is to do with Indonesia and with India, where we can introduce some products which can generate revenue, profitability, as well as go to market faster, which could be our cementless stems, cemented stems, some the robotic as well as power tools, and dual mobility. Having said the same thing, we also just received a week back our US FDA for the awaited CKS Tin Bin knee, which is going to be branded as Duranium. So that would drive a lot of growth for us at a global level in almost every country. So we're pretty gung ho about what lies in the future, including Ambition knee ready for launch by end of this year. So so pretty much kicked up. So a lot of growth across geographies, across products, across markets are going to come our way in the implant business.
Understood. Thank you.
Thank you. We have our next question from the line of Ankur, an individual investor. Please go ahead.
Yeah, good afternoon to everyone. Hello,
Good afternoon.
may I audible?
Yeah, you are.
Yeah. Good afternoon, sir.
Good afternoon.
Yeah, sir, my first question is that what kind of growth can we expect in the financial year 26, sir, in terms of revenue and profit and EBITDA?
Look, as I earlier mentioned, we continue to deliver the double-digit growth for our hospital business. So the trend will continue, because apart from that, there is a lot of activities which we have sounded that we are going to start in terms of the radiation and other things. So we are very optimistic. We continue to deliver the double-digit growth in terms of the hospital. Implant, as we mentioned, we are growing very fast, and with this approval of this CKS Gold, it is going to deliver the multifold growth in terms of the implant business into the next financial year.
Okay. So, as of now, what is the debt level, sir? And any plan to reduce the debt?
So debt level is around 0.27 on the consolidated basis, which is well within the reasonable level. As I mentioned, the debt, we are not going to expand the debt except the two things. For the radiation, we have already taken the line of credit of close to around 40 crore, which will come into at the end of the quarter one. Apart from that, for this implant, we are keep investing in terms of the working capital. So that will continue on the trend what you have seen into the earlier quarter. That will continue for the couple of 1 or 2 quarter more.
So can we expect, sir, now EBITDA level will improve in coming quarters?
So that is not impacting the EBITDA also. So EBITDA will definitely improve into the coming quarter, and we are going to see the growth in terms of the reduction of losses in terms of the PBT level for our implant business into the next financial year.
Okay, thank you, sir.
Thank you. We have our next question from the line of Rohan Vora from Envision Capital. Please go ahead.
Hello, sir. Thank you again. So, sir, I was just looking at the absolute occupied beds. We are at 646 beds for this quarter. We were at 690 in the second quarter. So how do we see this number? I mean, the volume basically of number of beds occupied, which has degrown sequentially. Thank you.
So the way we would want you to look at it is, what really has been the outpatient count growth, what has been the inpatient count growth, and essentially if you look at that, we have delivered double-digit growth on both fronts. So, depending on the specialty, what happens is that the average length of stay differs. So it could be from 1 day to 10 days, sometimes 20 days as well. So, occupancy would be driven by all those factors. The way I would, we would request you to look at it is, what has been the inpatient growth, the outpatient growth, the number of surgeries growth, and in our case, it has been double digit. Plus, if you look at, if you include Sunar acquisition, it is higher double digit.
Got it, sir. And going forward, you said that we look to grow at double digit. So how much of it would come from ARPOB growth and how much would come from increase in occupancy? What could be the ballpark breakup there?
What happens is that ARPOB growth is usually on an annual basis. We are seeing that the ARPOB growth is between 3 to 6%, and then the volume growth is another 8 to 10%. So usually this is what we see, but this could differ based on any particular year.
Right, sir. So on a longer term, we can expect this occupancy to grow at 8 to 10%. I understand it would differ on quarter to quarter, year-on-year basis, but on a longer term, this can grow by 8% to 10%.
Yeah, the inpatient count and the outpatient count, you can expect double-digit growth on those numbers. Yes.
Okay. Thank you.
Thank you. We have our next question from the line of Tanya Kothari from Om Capital. Please go ahead.
Yeah. Good afternoon, everyone. I appreciate the insights shared so far by the management, and lovely to see the progress in key segments like oncology and joint replacement. I have just a couple of questions. With oncology surgeries at Shalby increasing by 32%, how do you see the exemption of basic custom duties on 36 life-saving drugs and government plans to establish around 200 cancer daycare centers impact the Shalby's oncology segment? Will these initiatives create new growth opportunities for the company?
Look, oncology is a fast-growing segment and one of the important specialities for the group. And essentially, from a lower single-digit kind of revenue share in terms of our total revenues, it is now, I would say, the highest after the joint replacement. So, and we are continuously investing in this segment across the medical, the surgical, as well as the radiation oncology part. So, we have one of the strongest team in Western, Central, and Northwestern India across all these three segments. And as I mentioned earlier, we are investing further in 2 more linear accelerators, and the third one as well after this, which will make us, which will help us get to about 6 lakh machines across. So essentially, we are extremely bullish on the segment, and what happens is that the coverage of whether it is the government or whether it is the private insurance companies, the coverage is there for, all the different kind of treatments across oncology. So again, that will be an additional benefit for us, and it will be a high volume growth for us.
Okay. So can you provide insights into the division of patients between domestic patients and international patients which are being serviced in Shalby? Like number of patients, yearly basis and quarterly basis?
Sorry, I didn't get the question.
Sir, I was asking the division of patients between domestic and international. Like how many domestic patients are getting the treatment in Shalby as well as in international segment, like in quarterly basis and yearly basis. Can we have the data?
See, in our Delhi hospital, the mix is very healthy. About 50% of the patients coming in are from outside India, and the balance 50% are from within India. Among the rest of the hospitals that we run, because of the lack of international flight connectivity, the numbers are not as significant as a proportion to the revenue. But I can tell you that in all these different places like Ahmedabad or say Jaipur, we are being awarded every year on the medical tourism hospital facilitator for the year. So we are doing the highest volumes for international business in Ahmedabad as well, beyond Delhi.
Okay. And the last question, that is like increasing adoption of robotic surgeries and specialized treatment. What percentage of revenue is now derived from high-end procedures? And how do you see this evolving?
Yeah, so I think there are a lot of developments across robotics, on the orthopedic front. I think Deepak will be able to throw some light on that.
On the robotics front, basically there are multiple robotics that are coming in, but from our side we are doing two things. We already have I've got the approval to sell robo in India, which is in partnership with a company in South Korea. So we have our first installation that is happening this week in Shalby Hospital. And parallel to that, we are also we initiated a clinical study with American orthopedic robo company called Monogram Orthopedics. That clinical study should get kick-started in this quarter. And post that, we would be looking at furthering our robotics. So what we're trying to look at is, there have been robotics in the market for a long time, but as an organization, we're looking at new technologies in the robotic space to come in from there.
Okay. Thank you, sir. That's all from my side.
Thank you. We have our next question from the line of Viresh Tangwan, from an individual investor. Please go ahead.
So hi, thanks for the opportunity. I have a question on our the low cost model, which is the Shalby managed or operated. So what's happening on that front? Like, I have not the initial plan was like very, I would say, to take it the hospital count to around 40 plus. There's nothing much happening on that front. If you can just tell like what's happening there.
Yeah, so we have 5 franchisees which are operational already, and what we have shown, in our presentation is that there has been a growth on that facility. In all these facilities, so there has been a significant growth, although at a much lower base. We are assessing certain things, like for example, we dealt with a couple of FOSM models, earlier, and we realized that, for us to be able to keep a control on the quality, etc., it is very important to go more on the franchisee-owned Shalby operated models. So going forward, our focus will be a lot more on that. And as a group, as a kind of conservative group, we also want to kind of make sure that, we consolidate what we have first before, we venture out, because, we have a lot of underlying opportunities. But we will take them up as and when we are able to kind of get enough management bandwidth, as well as kind of grow in the existing hospitals that we run.
Okay, so nothing in pipeline in near future? Is that correct understanding?
Couple of things in the pipeline, but no announcements to be made as of now.
Mm-hmm. Okay. And another question I had was on the devices business. I'm pretty new to Shalby, but just wanted to know, like, what I understand, the company is US based, and we are importing the devices from there. But is there any possibility to start developing offshore, at least for the South Asian regions? So is there a possibility? And if yes, are there any plans?
So just to answer that, there are 2-3